Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, November 25th, 2008. In Australia, the Conference Board's index of leading indicators showed a 0.3% decline for the September period, the first decline in the index in 7 months. It was up 0.5% in August. Negative contributors included weaker stock prices, building approvals, a lowered yield spread, and a decline in rural goods exports. In New Zealand, meanwhile, a survey of business expectations for the fourth quarter showed the 2-year horizon for inflation fall to 2.7% from 3.0% in the third quarter. The prices that Japanese companies pay for services fell 1.4% in October compared to a year ago. The decline was driven by falls in transportation costs like ocean and airline freight. It's the first time that the corporate service price index has been negative in more than 2 years and shows the deflationary situation in the global economies as a result of falling commodity prices. The Aussie-yen pair hit a high near 63.70 to end yesterday's global session following a strong rally on the back of increased risk sentiment. However, overnight the Aussie gave up about half of yesterday's gains as the threat of a global slowdown still looms large and will pressure commodity currencies going forward. In Germany, the final version of GDP confirmed that the economy shrank in the third quarter by a slightly larger degree than originally reported. It puts the German economy into recession as it experienced a fall in exports. Consumer confidence, however, managed to increase to 2.2% in a separate report as sharply falling energy prices helped income expectations. The euro-dollar pair hit a low near 1.28 following the Eurozone releases and prior to the New York Open. It was also the end of a correction to yesterday's sharp rally. News from the U.S., including the Fed's new determination to unclog credit markets using up to $800 billion, helped spur a second day of euro gains. The pair reached 1.3080 following the New York Open as the risk sentiment was positive to start New York equity trading. Today's rally stalled there and was consolidating in a 60-70 pip range throughout the early afternoon session. In the UK, there were 21.6 new mortgage approvals in October, lower than expected and down compared to September. In a second release, business investment for the third quarter was down 0.2%. Forecasts had investment dropping by 1.8%, so the data was better than expected. The pound rallied strongly against the dollar today after retracing to the 1.4980 level. New York trading saw the pound surge 400 pips as the Fed's plan boosted demand for higher yielding assets such as the pound, though mainly against the US dollar. The pound had a much smaller rally against the yen. Turning to the US, GDP growth in the third quarter was revised down to show a 0.5% drop in its second release compared to the 0.3% decline originally reported. Personal consumption, a measure of consumer spending, showed a bigger than expected downward revision, falling by 3.7%. That bodes ill for fourth quarter economic activity as consumers cut back spending in the face of a deteriorating economic outlook, growing unemployment, and weak stocks and housing prices. Housing prices continued to fall in September, with the S&P Case-Shiller House Price Index falling to new record lows, with annual declines of 18.6% for the 10-city index and 17.4% for the 20-city index. Housing prices, as measured by sales from data obtained from Fannie Mae and Freddie Mac, were down 1.3% for the month of September and down an annual rate of 7%. The decline in the monthly rate was larger than expected by economists and shows that the housing market has yet to stabilize in the face of worsening economic conditions. The U.S. Conference Board measure of consumer confidence rose to 44.9 in November, rebounding from its all-time low of 38 in October. The expectations index increased to 46.7, though the present situation index fell slightly. In another release, the Richmond Fed index showed manufacturing activity deteriorating sharply, falling to negative 38. All broad indicators of activity, shipments, new orders, and employment contracted. The dollar-yen pair did not join in on the risk appetite, or perhaps the dollar weakness seen against the pound and euro were more the dollar being pressured and not risk sentiment improving, as that tends to push the dollar higher against the yen. In any case, the pair fell from 97.40 to start the session to the 95 level by 2:30 p.m. Eastern. Worries over global recession hurt carry trade yen crosses. In our last look at a fundamental release, Canadian retail sales surprised on the upside, increasing 1.1% in September. It's the strongest rise in sales in 8 months, and sales by new car dealers were up for the first time since January. The Loonie jumped today on the retail sales data, and the Forex markets continued the risk appetite sentiment in early New York trading that we saw yesterday. The Loonie broached the 1.2125 area after a 300 pip rally against the greenback, which was almost 850 pips off its high seen on Friday. There was a pullback to today's fall though, and the pair was trading near 1.2320 around 3 p.m. Eastern. Overnight, Germany will release import and consumer price indexes. The UK will release its second version of third quarter GDP along with a measure of services. Tomorrow, the US starts with durable goods orders and weekly jobless claims, and continues with data on personal income and spending, new home sales, the Chicago PMI, and the final version of November's UMich consumer confidence. And that wraps up today's broadcast. Thank you for joining us here at cmsfx.com, and happy trading.